Hello friends, this is Raman Gill with a weekly Forex overview for the week of February the 29th. Before we get started, just a quick disclaimer. This is for educational purposes only. If you have questions about your individual investing need, I recommend you talk to an investment advisor. Quick look at the fundamental themes that have been going on in the market right now. We have seen a lot of US dollar strength, good numbers coming out of the US, which has renewed the talk of interest rate hikes. As soon as March, whether that plays out or not is yet to be seen. However, right now we are seeing a lot of US dollar strength based on the positive numbers out of the US. British pound, on the other hand, has been a different story. The broad fundamental theme in play right now is a Brexit, and because of that, it has put a lot of pressure on the pound, which we'll continue to see if the situation stays the same. As for the euro, we have seen a weaker data out of the eurozone, which has led to talks about monetary policy, more stimulus into the economy. So we are looking at monetary policy divergence between euro and the US dollar, which has put pressure on the euro against the US dollar. So we expect to see the same going forward as well. So now let's take a look at our Forex factory to see what kind of news we will see this week. We have on Monday, we have a lot of retail sales, a lot of news out of the Eurozone. We have net lending for individuals for the British pound, and then current account for Canadian dollar, Chicago PMI, and pending home sales for the US dollar. Overall, a lot of medium type of news. And Australian dollar, this week we have a lot of Australian dollar news. So if you're trading the Australian dollar, something to pay attention to here. We have building approvals on Monday and also manufacturing PMI numbers out of China. When we see poor data coming out of China, that has an impact on the broader markets. So do pay attention to the data that comes out of China. We also have the interest rate for Australian dollar and statement from RBA. So if the statement is dovish, if they start talking about weaker economy or overall global economy being weaker and that leading to a pressure on the Australian economy, all of that could lead to a drop in Australian dollars. So pay attention to that. And then going into Tuesday, we have more manufacturing PMI numbers. We have German unemployment rate. Then we have PMI numbers, manufacturing PMI number for British pound, which is important. GDP for Canada, which will have an impact on US dollar CAD. And then we have GDP price index. We have seen dairy prices going down, and that could have an impact on New Zealand dollars, so something to keep an eye on. ISM manufacturing PMI numbers for the US dollar, which are important, and then GDP for Australian dollar. We have construction PMI numbers for the British pound, and then we are getting into the ADP non-farm employment change numbers for the US. Crude oil inventories for the US dollar. Last week, we saw an uptick in the oil price. If we see a buildup in oil inventories, which will have a negative impact on oil price, which would in turn have a positive impact on US dollar CAD and negative impact on Canadian dollar. And again, more news for Australian dollar trade balance, which is again a critical number for Australia. Going into Thursday here, we have services PMI number. British economy is heavily based on services. So services PMI number will have an impact on price of the British pound. We have unemployment claims for US dollar. ISM non-manufacturing PMI number for US. Non-manufacturing PMI number is important because US economy is also heavily based on services. So this non-manufacturing PMI number will have an impact on how the US dollar reacts. And then retail sales for Australian dollar. Like I said, a lot of data for Australian dollar. So if you're trading any cross Australian dollar crosses, you want to pay attention to this number. And then on Friday, we have a very, very important number coming out, the non-farm employment change, which is usually a big number for the US dollar. So again, we've been seeing positive numbers for the U.S. Last week we saw positive data come out for U.S. and now these numbers that we will see come out for U.S. this week will have a big impact, especially going into the FOMC meeting for March. So pay attention to those. Now let's move on to our commitment of traders data. So we will start with Euro US dollar. As we can see here, lately we've been seeing a decrease in the short positions for the euro against the US dollar, which means a potential strengthening in euro. However, between this week and last week, we have the numbers have been neutral. There has been a slight change in numbers, but overall, from bigger perspective, the numbers have stayed fairly stable. Let's take a look at the pound here. Okay, for British pound, again, the numbers have been fairly neutral. Canadian dollar here, we have seen a decrease in the short position. So the green line that you see down here, we have seen a decrease in leveraged money short positions for Canadian dollar, which is positive for Canadian dollar. That means negative for dollar CAD. So we could see a downtick in dollar CAD. For Australian dollar, we have seen the leverage money short positions decreasing, which would point to a higher and uptick in Australian US dollar. We have actually seen a cross of asset manager positions have actually gone long for Australian dollar, and we are seeing a decrease in the leverage money short positions, which would point to a stronger Australian dollar. Going over to the New Zealand dollar here. Similar case here as well. We see the leverage money position shorts have actually decreased a fair bit, and now we have gone into long leverage money long positions and dealer short positions. This suggests more of a strength in New Zealand dollar. Okay, moving on to the charts here. Here is we'll start with Euro US dollar chart here. We're looking at a weekly chart. From the weekly perspective, this was Euro US dollar was very bearish, and now this week we would look for more bearishness in euro dollar here. So we could see a pullback either into 1050 area, or we could see a pullback into a 109.80 area, and that could make for good selling opportunities here. Looking at the daily chart for the Euro US dollar, we see a big bearish close on Friday, and as we can see here, market has gapped down a little. We are at this trend line, upward trend line here on the daily chart. So what we could see here is a bit of a pullback. So we are bearish in our outlook for Euro US dollar for this week. And however, the market doesn't just drop. So we normally expect to see a pullback. So in terms of pullback, some of the levels that we may potentially see the pullbacks would be this 109.50 level right here. And then further up, this 109.80 level looks good. Or we could also see the market go all the way up to 1050 level. Any of these levels could provide us potential selling opportunities. Overall, the outlook for euro for this week would be bearish. Let's take a look at the pound here. We have seen a very bearish weekly close for the pound. And if you take a look at it, we are actually into these levels that we haven't seen for quite some time since March of 2001. So the next level that we're looking for pound could be 3,700 level, and below that 3,500. So we may see the pound move towards those levels. However, it could take some time. So on the weekly perspective, we are bearish. Let's take a look at the daily here. Daily, we're looking at bearish as well. As we can see, the market has closed down here. So some of the potential levels for a pullback would be 1.4040 level. This could be a potential sell opportunity here, or if the market goes all the way up to 42.34, this could be a potential selling opportunity here as well. or around this level here as well, 41.60 level. This could be an opportunity for us to go short. So we'll be looking for pullbacks for further selling in British pound. Again, our outlook on pound is bearish for this week. Aussie here, we have had a nice bearish close on Aussie for the weekly. And in terms of the daily candle, we have seen bearish close as well. Let me just get rid of my indicators here. Okay, so that was a very, very bearish daily candle. As we can see, the price came up to 72.50 level, wasn't able to hold above, and we saw a nice bearish close. In terms of pullback, we could see pullbacks in around this 71.60 level is nice, and into this area here as well, which is 71.80 level. So if we see price come into this and stay below, we could look for a selling opportunity. And of course, if it comes up to 72.50, that may provide us a selling opportunity as well. Or as I said before, 71.60 could be a potential opportunity. Again, we'd be looking for reversal patterns at this place for potential selling opportunities. Now, we do have a lot of news coming out for Australian dollar, so do trade this with caution. If the news starts coming out positive, we could see a break above this level. And if it does break above this level, then we are looking for these higher levels here. So even though we have seen good US dollar data come out, however, the news that comes out this week could change that perspective, so keep that in mind. For New Zealand dollar, as we can see, the market has gapped down here. In terms of the weekly close, we had a nice doji here, which would suggest a rejection from this top level. So would be weekly outlook would be bearish. Looking at the daily candle here, that was a really bearish candle, engulfing close, nice rejection from the 67.73 level. So again, for this week, our outlook for New Zealand dollar would be bearish as well. And in terms of the potential pullback levels, we could be looking at the 66.80 level. This would be a nice level for a potential pullback, or 67.20, and then further up 67.50 or 67.73. These are some of the levels that I'd be looking for potentially short setups for the New Zealand dollar. Again, if we see a close above the 67.73 level, then we'd be targeting the highs here. So keep that in mind. Dollar CAD here, we had a very small daily candle. Let's take a look at the weekly candle. Weekly candle was a nice bearish candle. However, we are starting to get close to this strong support level. And in terms of our daily candle, as we have seen, a very small candle, we didn't see much of a movement, which puts a bit of a neutral bias on dollar CAD. What we have seen last week is that oil was going up, which would put positive pressure on Canadian dollar. However, we saw good data come out of the US dollar as well. So there was a bit of a tug and war between dollar CAD, and we saw on Friday price didn't really go anywhere. Very, very tight range here. It has failed to break this low. However, it did close towards the bottom of the range here, and we could see if the oil stays positive, the oil keeps going up, we would see dollar CAD go down here. And in terms of some levels here, the 34.30 level here looks nice. This will be the support level. And if the price holds above this level, we could see the price pushing up. So in this case, even though our weekly candle is very bearish, our daily candle is stuck at the bottom here. So I am neutral on dollar CAD. Again, we'll have to see what happens with oil and what happens with the US dollar. So the outlook for this week on dollar CAD would be neutral. So that's all for today. Good luck with your trading, and I'll see you again next week.